it's a hell of a mess, and it's quite sad because there are going to be a lot of people who are going to be hurt by it. But I didn't invent the monetary system, and it's you sit down to you do things wrong, and eventually there's a banquet of consequences, and that's what we're seeing here. I mean, it's been a long time coming. We went off the gold standard in '71. In 2008, I thought at that point in time, and I was deadly wrong in 2008. I thought that was the beginning of the end of fiat currency, and that we're going to have massive inflation because of all the QE that came. And I was wrong. I mean, I was completely wrong. It cost me and my investors a great deal of money. I mean, I was right for a few years. Gold went up a lot in 9 and 10, and then they figured out a lot of ways to bring it back down, and the cycle turned.
So, Larry, what are some of the differences between now and 2008? If you'd like to highlight some of those.
It's a great question. The biggest one is that we're going direct now. We're actually 2008. The money that was created was injected into the banks, remained on bank balance sheets, and unless banks created credit, it didn't lead to an inflationary outcome. There was no transmission mechanism to the people, and credit is what's needed to actually create the working money supply. And so there was more money created, but the velocity of money fell. So that's item number one. Item number two, and it's a big one, is that at that point in time, we had foreign buyers for our bonds. And, we were, and a positive real interest rate, not greatly so, but still positive. And so foreigners could, buy the dollar, buy our bonds, hedge out the risk, and that all worked. That ended in Q4 of 2014. And it's not surprising that soon after that, the price of gold bottomed and we started going the other way. I mean, now we really are having a very hard time selling our bonds. The stories are told that the long end of the U.S. bond market is very poorly bid. And so the Treasury has moved a lot of the money that they've been raising into the short end of the bond market. And, they've been heavily incentivizing the banks to buy it, basically. And, because they took away the special leverage ratios for the banks, they basically took it to infinity so that the banks could buy it. And then if you look at the Fed, balance sheet, they've also been buying their own bonds. So the long story short, I mean, it's convoluted because of the monetary plumbing, and they obviously don't really want us to really fully understand what they're doing. But the bottom line is, it is in a macro sense, it really is as simple as Burr. They're printing money. They're creating more money to service their debt, and they're creating more debt to service that money. And I've talked about this in my letters in the past. The potential risk here is what that could lead to is a bond doom loop. I mean. And so the debt to the big picture, and we've talked about this before, Tom, is the big picture is we've got way too much debt to GDP. We just can't service it. And additional debt doesn't grow GDP. So the problem of additional debt only makes it worse. And, in the past, this has happened in the past many times, lots of countries. And, there are 2 or 3 ways to do it. I mean, you can default, you can restructure. Roosevelt did that in 1934, or you can inflate your way out. And defaulting is not a choice because obviously that's kind of country failure. That's what Argentina does, or Greece does. Restructuring, a la FDR. That's actually that would be my preferred route, and that would be a good choice. Admit we've got too much debt. Admit we've got to go to sound money. Create a new structure that the dollar is backed by silver and gold, and return to a sound money standard. I actually think that's the least painful, most fair way of getting out of this mess. But of course, it's not very well understood. I think the odds of politicians choosing it are zero. And so what they're going to try to do is they're going to try and inflate their way out. And the problem with inflation is like being a little pregnant. You can't have a little inflation. In a system this broken, it's very likely a little inflation is going to turn into a lot of inflation. And so they did this after World War II because we ran up a lot of debt in World War II, and we have the same kind of ratio of the debt to GDP. And that was the first time the Fed used yield curve control, which is they held the bond market at a certain rate. They committed to buy whatever was necessary, and they let inflation run hot, knowing that they could do so. And they weren't really at risk of the dollar failing because the dollar was on a gold standard at the time. So this situation is slightly different, but the big picture is the same. They've got to have inflation. They've got to basically get the economy rolling and get prices going up so that the debt becomes serviceable. They've talked about it. They say we're willing to let inflation run hot. They consider this low inflation to be a problem. Of course, it has run hot and they're not reporting it right, but that's a different story. I don't know what outcome is going to happen, and hyperinflation is going to be very painful. But my point here, and what I believe, is that the system is really fundamentally deeply broken, at a political level and at a monetary level. And we're in a fourth turning as a book that describes that situation very well. And we need to fix the system. And at the bottom of the breaking of the system, in my opinion, it's the money. The money's not sound, and that's why we have this problem.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
And it's built up over years and years and years. And now we've got the banquet of consequences. So, we're going to suffer in any event. And I would suggest that, I've got a limited time frame on this planet. I'd say, okay, let's take a lot of suffering, restructure, go back to sound money, get it over with. And then, things will get better. I mean, I think once we go back to sound money, things will get much better. There is a better future on the other side of this. So, they could drag this out for 20 years and, we'll all be kind of quote unquote suffering. I mean, to me, this is no way to run a railroad. So I would much rather, and one could say this isn't correct, but I would much rather see it happen quickly, rip the Band-Aid off, so to speak, and solve the problem and get back on a sound footing so that we can have an economy that my kids and their kids, can live in and be proud of. And, everything kind of works the way it should, because I don't think there are many people today watching and, watching what went on in DC and other things who could dispute the fact that, this isn't working correctly. I mean, this system is broken. It's very, very broken. And, putting Band-Aids on it, trying to fix it, this way and that way, I don't think they're going to work. And so,
and you were saying,
go the full measure,
And you were saying, as an example of Weimar Germany, once they kind of had that hyperinflationary bust, that things did, return. It started growing fairly.
Yeah, the people were so scarred they followed an idiot. They followed a psychopathic idiot. In Hitler. But yes, if you read the economic history of Germany, when they restructured, they came back and they originally tied the new mark, to land, and then they tied it to gold. And then some people tested them and they showed that they really meant it and that they weren't going to run the printing presses anymore. And yeah, Germany recovered pretty well. Mm-hmm. I mean, it was sad because a lot of people had their wealth wiped out. So to say it recovered well, it was pretty tough. But the fact of the matter is the economy got going again, and Germany became healthy again. And economically, and of course, then they, as I said, they went the wrong way politically, but that's a different story. Mm-hmm. It's, in my view, to avoid all of that pain and to make the pain be spread more fairly. That's why the structured, reval is a much better approach. I mean, what FDR did in 34, is a much better approach. And so, I would prefer we go that way. I think that's possibly why, Judy Shelton was being nominated for the Fed board, because she understands all this. And, she'd be a good addition. We are going to have a currency crisis here. I mean, we're having a currency crisis, really. Mm-hmm. I mean, that's in my view. And so we might as well think intelligently about how to get out of the currency crisis and make things better on a go-forward basis. I mean, interestingly, the bad news is, it's like yin and yang. The bad news is there's going to be a ton of pain. The good news is, that's going to lead to political reform. I mean, people are going to be damn angry, damn pissed off. And, who's going to believe the Federal Reserve? Who's going to believe our politicians? I mean, my guess is we're going to have a whole new set of people. We're going to have term limits. We're going to have sound money. And these are all better things. These will make a better world, But, in the interim, some of the powers that be who have a lot of money in bonds are going to get hurt badly. Mm-hmm. One of the things that we got cut off when we lost our internet connection earlier, and I talked about a little bit, but I think it's important to understand, is that the thing to watch here is the bond market. Mm-hmm. That's the next thing to go. I mean, when interest rates start going up, because people in the bond market say, hey, I don't want to take these negative real returns. I mean, yeah, I hold a bond that's going to pay me back the principal, but what's that going to buy? There's obviously inflation here. And so the Federal Reserve has said, okay, well, we can't let the interest rates go up. The Volcker-like solution is no longer possible. So we're going to buy those bonds. And, their balance sheet's going to swell, and that's going to people are going to realize that means printing money, and then inflation's going to get worse. And you can see what we're going, it's like an avalanche, or, it's a doom loop is what I call it. It just gets worse and worse and worse until the end point is the money's got no value. Mm-hmm. And that's the model that I think a lot of people, a lot of investors and others, I think most of the country is missing and does not understand that model and how it works. As I also say in my letter, we're getting to what I call, or said on Twitter, we're getting to what I call a tipping point. Mm-hmm. Where once enough people understand that this is an issue, then they start buying Bitcoin, gold and silver, and gold stocks. and then it becomes self-fulfilling, right? And the bond market goes down, the Fed has to buy more, everyone goes, holy shit, the Fed, balance sheet's gone up again. That means more inflation. I got to buy more gold, et cetera, et cetera. And pretty soon, it's a massive example of Gresham's law. And pretty soon, gold is worth $10,000 an ounce, and the dollar just doesn't buy as much. So, gasoline will be $5 or $10, food will cost more, et cetera. So.